All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy, and this is it, folks, isn't it, right? This is the last time we'll be together today, unless you wait another 14 and a half minutes and meet me at the Cow Guy Close, 1 Central, 2 Eastern, top of the hour. Love to see you there. We got a lot to talk about again today. Boy, these stories just keep on giving. So tune in, the Cow Guy Close, 1 Central, 2 Eastern, top of the hour. I'll see you there. All right, let's take a look at the corn table while we're waiting for the Cow Guy Close to start. How about we've got September corn down 10.5 cents, 5.96.5. Geese corn just can't hang on to that $6 level. It's 5.99 3/4, 10 cents lower. We'll see what it does going into the close, but right now just ticked lower by another tick to 5.99.5. How about soybeans? That's another one to check in on. It was lower, continues to be so. Ceps off 8 cents to 14.24 even. We've got the new crop off 8.5 to 13.97.5, giving up that $14 handle itself. Wheat in Chicago, 19.5 cents lower. September is at 7.80 3/4. We've got the December contract down 19 at $8 even. Hard red wheat in Kansas City. Well, let's tell you what that looks like. September's off 20 cents, right? That's 8.46.5. That's last. March, middle of the deferreds, is 19 3/4 cents lower at 8.59 3/4. Spring wheat in Minneapolis. Here we come, right? 16.5 cents lower in that subcontract. 8.81 1/4 is last, and then we've got March down only 8 cents to 9.13 3/4 as we get out into those deferreds. Finally, let's see what cotton's doing. It was higher a little bit ago. It still is by 49 points in the D's. 94.55 is last, while that one tries to hang on to above unchanged. Let's bring our next guest analyst in. It's Ted Seifried from Zaner Ag Hedge in Chicago. Ted, thanks for joining the show. Well, now that you're an expert in the comings and goings of Nancy Pelosi's plane and watching Flight Tracker all morning,
right?
What are your thoughts? As you can tell, I'm skeptical of everything. But what are your thoughts on this market?
Yeah, I mean, it was kind of fun to watch Ag Twitter turn into flight charting Twitter. But yeah, okay. So somewhat predictably, the plane landed in Taiwan and the world didn't end. So we were down sharply yesterday and this morning. And then we've tried to recover since then. Beans 20 cents off lows at this point. Although we did almost get to unchanged, and then we kind of slid back as we kind of wait and try to weigh what China is going to do next. We see that they're going to run some live fire military drills all around the island of Taiwan, some of it actually encroaching on Taiwanese waters. And that is a pretty bold statement, I think, by China. But more specifically, we want to know, what does this mean for their agricultural import program? Are they going to buy more beans or less beans? And I think most people's reaction is, well, maybe China's not going to buy for a while. I kind of wonder, Scott, and this is just sort of an off-the-cuff theory, I wonder if China starts buying a lot more all of a sudden. We've stated, or pretty much every government official, U.S. government official has stated that inflation is our number one enemy. Well, what can China do to mess with that? They could come in and buy all of our soybeans and buy a whole lot of the crude oil coming out of SPRs and send both of those markets to new record highs potentially.
Yeah, and at the same time,
last laugh on China.
And at
the same time,
they shut their country down.
They can stockpile in front of their ambitions to invade Taiwan and the South China Sea. I mean, it would actually make a whole lot of sense to me, Scott.
Well, this is a talk we need to have over a couple of beers. That's what I think. But hang on, we got to go away. We have to pay some bills here. We're going to come back and talk more over a few beers, I guess, with Ted Seifried from Zaner Ag Hedge after this. All right, thanks for coming back. This is Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Schulte rhymes with melody, right? How about this? Let's take a look at live cattle and see what's going on in the live cattle market. It's quietly lower today. We've got October down 50 cents to 142.12. And that's just about 25 cents off the lows there. We've got December off 15 cents to 148.35, and that's 30 cents off the lows there. So a quiet board when it comes to live cattle. How about feeders? They aren't getting the bump you'd expect from a lower corn board. That means they're weak. Ceps off $1.45 to 181.65, and that's about 30 cents off the lows there. And we've got $1.25 lower in October to 184.22. And finally, lean hogs. They too were lower the last time. They are now the deferred's catching a little bit of a bid, if you can call 5 cents a bid. But let's go up to October's up or down 55 cents, double nickels, 96.30s last. But we do see Dees and Feb both eking out a gain. Dees is up a nickel to 87.77, while Feb's up 12 cents to 90.92. Good to see some up arrows when it comes to the livestock today. All right, let's get back to our guest analyst waiting in the wings, Ted Seifried. Ted, anything that catches your eye when we talk about these livestock?
Yeah, I like those back months in hogs, like out there in Feb. I think there's a pretty good value out there because, again, I feel like your speculators like the hogs for a recessionary trade or an inflation trade. And I also think, I really think domestic demand, especially for pork, is going to remain strong through the winter season. But no, let's talk about feeder cattle, right? To your point, corn's lower on the board, albeit off the lows, but down double digits, and feeders can't catch a bid or hold on to it. And you've got an outside reversal down day kind of working in the feeder cattle. I'm gonna also say that you have the potential for a head and shoulders topping formation in the feeder cattle market. So I'm a little worried about some downside potential, and that would go along with the seasonality there in feeders. So you might be looking at a deeper correction coming for the feeder cattle. Now, ultimately, that might be a pretty solid buy, but I'm on correction alert for the feeder cattle right now. And feeders being the leaders, you would think that would filter over to the live cattle market as well.
Yeah, I mean, you're not the first one to say that. We had somebody in an earlier block, that head and shoulders, until it breaks the neckline, it's not, but it's starting to threaten. That's obviously something we have to keep an eye on. I totally agree with you. And you know what? I also think, Ted, you could call me wrong, but I think we've just got some doldrums. I mean, the world's economies are receding. We've got GDPs being downgraded lower everywhere. There's no real stud that's going to step up and take us out of this. Usually it's the U.S., but we're hurting. I mean, look at our last GDP read. So I think there's a little bit of that melee's going on as well.
Well, we're not adding the stimulus, Scott. So when you take the stimulus away, naturally the inflation is going to cool off. And then also, if we were even to try to add the stimulus, you get the law of diminishing returns. Is it really going to do as much as it did a year ago? So yeah, I'm with you, Scott, 100%.
Okay. We got to jump. Thanks very much. I probably shouldn't open up that. But anyway, Ted Seifried, Zaner Ag Hedge in Chicago, thank you very much. We're going to bring it back to Nashville so I can quickly throw it back to Suzanne.